Welcome back, everyone. UnitedHealth Group, a titan in the healthcare sector, just dropped its third quarter 2025 earnings, and it's a classic tale of two stories. Impressive revenue growth, but significant pressure on profits. So, what's really going on with UNH, and what does it mean for investors? Let's break it down. UnitedHealth Group Incorporated, ticker UNH, is a diversified American healthcare company that operates through two distinct platforms: Optum, which provides health services, technology, and data-driven solutions, including pharmacy care services and healthcare analytics, and UnitedHealthcare, which offers a comprehensive range of health benefit plans and services to individuals, employers, and Medicare and Medicaid beneficiaries. As one of the largest healthcare companies in the world by revenue, its integrated business model aims to improve healthcare delivery, simplify the patient experience, and make the overall system more affordable and efficient. First, the good news. UnitedHealth posted $113.2 billion in revenue, a solid 12% jump year over year. This was largely driven by strength in their Medicare Advantage plans and their pharmacy benefits arm, Optum Rx. Membership also grew, adding nearly 800,000 people domestically. Now for the not-so-good news. Profitability took a major hit. GAAP EPS cratered to $2.59, down 60% from last year. The key metric to watch here is the medical care ratio, which spiked to 89.9%. That means nearly 90 cents of every premium dollar went to covering medical costs, up significantly from 85.2% a year ago. This squeezed the operating margin down to just 2.1%, a fraction of its former self. So, why the profit compression? Management pointed to persistently high medical costs, especially in outpatient care like surgeries. They're also facing ongoing headwinds across the industry, with specific challenges in their Medicaid and value-based care segments where state funding isn't keeping up with costs. This quarter is a clear reflection of a company in a transition year. But here's the critical takeaway. Despite these pressures, UnitedHealth raised its full-year 2025 earnings outlook. This is a bold signal of confidence from new CEO Stephen Hemsley and suggests they believe their turnaround plan is taking hold.
The real story isn't about Q3 2025, but about the setup for 2026. Management is taking decisive and some would say painful actions to restore margins. Their strategy has three key pillars. Repricing risk. They are aggressively repricing their Medicare Advantage, commercial, and ACA plans to better reflect medical costs, which includes targeted plan exits and network reductions. Restructuring Optum Health. They're refocusing on value-based care, narrowing provider networks, and exiting underperforming contracts. The long-term target is a much healthier 6 to 8% margin for this segment. Strategic investments. They're continuing to invest in technology, AI, and workforce incentives to drive long-term efficiency. The message from the C-suite is clear. Expect a much stronger 2026, particularly in commercial and Medicare, though Medicaid will likely remain a challenge. The bull case. You're buying an industry leader with undeniable scale and revenue growth, led by a proven CEO who is taking the necessary, short-term painful steps to fix the business. The raised guidance is a positive signal, and the strong cash flow of $5.9 billion supports continued dividends and buybacks. If their 2026 plan works, this could be a buying opportunity. The bear case. The medical cost trend is a powerful, industry-wide problem that might not be so easy to solve. The profitability collapse is severe, and there's a risk that the 2026 recovery could be slower or less robust than expected. Let's look at the possibilities that have investors excited. Point 1. Analyst confidence. Despite the recent slump, Wall Street hasn't given up. The consensus rating remains a buy, with an average price target around $395. That implies a potential 7 to 8% upside from current levels. But the real excitement is in the long-term forecasts. Some analysts project this stock could more than double by 2030, reaching prices between $790 and $860. Point 2. Strong fundamentals. The company's recent Q3 2025 results were solid. They posted revenue growth of 12% year-over-year, and importantly, they raised their earnings guidance for the full year 2025. This suggests that operational efficiency is improving and sets the stage for potential margin expansion in 2026. Point 3. The innovation engine. A key growth driver is Optum, UnitedHealth's health services arm. Their push into digital and AI-driven healthcare services is a massive opportunity. By using AI to improve cost management and patient outcomes, they're positioning themselves at the forefront of the industry's future. Point 4. The buy-the-dip thesis. This is the big one. A 30% pullback in a market leader like UnitedHealth is rare. For many long-term investors, this looks like a classic chance to buy a high-quality company at a discounted price, betting on an operational turnaround and growth acceleration beyond 2025.
Now, let's flip the coin. The stock's decline didn't happen in a vacuum. There are real and persistent challenges. Challenge 1. Rising costs and regulatory scrutiny. This is the evergreen risk for healthcare giants. Rising healthcare costs directly pressure margins. Furthermore, UnitedHealth Group is facing increased regulatory scrutiny, particularly around its Medicare billing practices, which could lead to fines or operational changes. Challenge 2. Membership dynamics. The market is expecting a slight contraction in Medicare Advantage membership. This is a critical revenue driver, and any slowdown here is a direct headwind to growth. Challenge 3. Operational hiccups. Not all parts of the business are firing on all cylinders. Specifically, Optum's revenue growth has been slower than expected in some segments, creating short-term concerns and validating some investor skepticism. Challenge 4. Investor sentiment. Put simply, there's a lot of uncertainty. Investors are worried about the company's ability to execute its turnaround amid intense competition and a constantly evolving regulatory landscape. The volatile trading and year-to-date decline are a direct reflection of these near-term fears about earnings and cost pressures. To summarize, UnitedHealth Group offers significant long-term growth potential, powered by its industry leadership, strong fundamentals, and innovative push into AI-driven healthcare through Optum. The current valuation is much more attractive than it was a year ago. However, it also faces serious near-term challenges from regulation, costs, and membership trends that are creating earnings pressure and spooking the market. The overall analyst consensus for UnitedHealth Group is a moderate buy. This isn't a lukewarm endorsement, it's a confident one, backed by a significant number of Wall Street firms. In fact, 29 research analysts have come together to form this positive outlook.
But what does that mean for the stock price? The average price target from this group sits at around $385 per share. Based on current levels, that implies a potential upside of roughly 7 to 8% from here. That's a solid expected return that definitely gets investors' attention. Now, if we dig a little deeper into those ratings, the picture gets even more compelling. Out of the analysts covering UNH, an overwhelming majority, 24 of them, have a firm buy rating on the stock. Their median price target is even more optimistic, coming in at about $395. This suggests that a large segment of the analyst community believes UNH is poised to outperform the market in the next year. It's also worth noting that only a very small fraction of analysts are recommending you just hold or sell this stock. This underscores a strong, widespread confidence in UnitedHealth's future prospects. Of course, this is not financial advice, and you should always do your own research. But if you're looking for a well-established company in an essential sector with strong analyst backing, UNH is certainly one to watch. What's your take on UnitedHealth? Are you bullish or bearish? Let us know in the comments below. Don't forget to like and subscribe for more deep dives into the stocks moving the market. Thanks for watching.